I got paid for this video. Now I become a penny pumper. Bam, bam. Welcome back to Strongman Personal Finance. I was paid to make a video on this stock called Performance Shipping, ticker symbol PSHG, and it is a penny stock. And a lot of you may say, well, Strongman, you just got paid to pump this penny stock. No, this is a financial statement analysis for a client that paid $40. So I'm going to go through the financial statements. I'm definitely not saying you should buy this stock. It's a penny stock, as you're going to see very soon. But if you would like me to do a personalized video for you, you click that link in the pinned comment, you send me $40, and you get your very own personalized video from Strongman. So let's go ahead and fulfill this client's deepest, darkest desires and do some fundamental analysis of Performance Shipping. So here it is, Performance Shipping Incorporated, ticker symbol PSHG. Now we can see the stock price has just absolutely blown it out of the water. It's down just a mere 99.64%. It's got a market cap of $9 million. Oh my God. With revenue of $75 million, net income of $12 million, and shares outstanding of almost 12 million. Now, the first thing that stands out to me right off the bat is the market cap and the profitability. This company had more profits in the last 12 months. They had 12 million of profits than their entire market capitalization or value of all the shares publicly held times the price of the shares. Their PE ratio is 0.25. Oh, it's so cheap. What does this tell me, ladies and gentlemen? There is something very scary that some other market participants are seeing in this company that you may not see. Just because a company is cheap doesn't mean it's a good buy. Because like by all metrics, it's cheap. Like they had 12 million of profit in the last 12 months. And their market cap now is 9 million. Why? Why is their PE ratio 0.25? Something's wrong. I mean, we'll go look at the financial statements and we can see. But sometimes it could be the fact that there's something in the future that is coming that people that understand this market are seeing that a lot of retail investors may not necessarily see. And when you see a stock that has a $9 million market cap, it's probably there for a reason, okay? So let's read a little bit more. Performance Shipping, through its subsidiaries, which is just, they basically have a bunch of oil tankers, provides shipping transportation services throughout its ownership of tanker vessels. It owned and operated 5 Aframax tanker. Well, they actually have more than that. The company was incorporated in 2010 and is based in Athens, Greece. So we're going to learn all about these amazing people, these Greeks, these stinky Greeks that run this company. So let's look at an overview of the financial statements, okay? Revenue went up very massively over the last couple of years. Why? Because tanker rates went up massively. There was a collapse in demand for oil tankers and all sorts of everything, basically, because the entire economy shut down. And then once economies reopened back up, suddenly demand for goods and services to be shipped massively skyrocketed. That makes total sense to me, okay? This industry is insanely cyclical, okay? We're going to actually look at something. It's all based on the supply and demand of shipping services. Do countries around the world need stuff shipped? Yes. What determines that? Well, there could be economic catastrophe in one country, economic catastrophe in another country, or economies can be doing great in one country and then bad in another country. It's a very complex market. But if you think about it, it's all based on how the economy is doing. If we need lots of oil, we need oil, and everybody's using up oil, okay, shipping rates may go up. If oil's bad and evil and nobody likes oil anymore, oil shipping may go down. If the economy's bad in a country, we're not going to be consuming as much oil. So it fluctuates massively. It's a very complex market. But we can see they have some very odd revenue things going on. So they had revenue that was flat for a couple of years, and it collapsed, and then it went back up. This is a very complicated company, number one, because it's actually a spinoff of another company. And all these companies are interconnected. It's this weird web of ownership. And, this thing is a freaking headache, man. I don't know. So anyway, they have a massive revenue spike. So right off the bat, it's like, okay, why did their stock just collapse if their revenue went up massively. Why would their stock crash with growing revenue? That's weird, okay? The gross profit is up. Operating income is up. Now, here's one thing I've noticed. The only time it looks like this company was profitable from an operational standpoint is 2014, 2020, and 2022. You can clearly see the cyclical nature. You have massive collapses in operating income. You have random spikes up. It's all over the place. How you can't forecast this company. This isn't a company that you would do like a DCF on. This is something that you would say, okay, how's the shipping, how's the chartering market doing? How's the tanker chartering market doing? Is it on a down cycle and will it recover? When is it going to recover? Okay, I'm going to buy in here when it's at its absolute bottom, and then I'm going to make money when it comes back up. I don't see owning a stock like this as like a long-term investment, something that you can just own forever, because it's going to be all over the place. But, I mean, just looking at the numbers, yeah, recently their operating income has absolutely exploded. Now, if we look at it from a quarterly perspective, it was basically the last 2 quarters, their operating income has done pretty well. But you can see the clear trend is generally this company is not making money. It generally loses money, okay? Net income also massively up. Let's see. Free cash flow. Negative free cash flow, okay? Dividend per share. So apparently they don't even have a dividend. They haven't had a dividend in a long time. There's all these different fluctuations, okay? So that's the first thing I noticed. Now, we're going to look at the balance sheet in the 10K because I don't like looking at this balance sheet. And let's look at cash flows here very quickly. Okay, this is very odd. Let's go to the annual. Operating cash flow. So generally, overall, this company ebbs and flows. You have some years of negative operating cash flow and some years of positive operating cash flow. It's a very cyclical industry, okay? You can't project something like this. How do you know? I don't freaking know. Okay, let's see. Capital expenditures. Basically, this is them buying and selling boats. What? Hold on a minute. Oh, did they have like a special dividend here? That's interesting. So apparently it looks like they had a dividend sometime in 2022, but it's not like a steady, consistent dividend. You can't have that with a company like this because in times of low chartering rates or stress, they shouldn't be paying a dividend. So I wouldn't be buying this company for a dividend. Share issuance. They had a pretty significant share issuance in 2022. Let's see exactly when they did that. So they issued shares. Looks like in the 3rd quarter of 2022. When did the stunk price crash? Let's see. Looks like the 2nd quarter of 2022. So the stunk price crashed before they did their massive share issuance. So something else caused the stock price to crash. Okay. Let's keep going. Let's see. Debt issued and paid. Looks like they're packing on some debt. What's going on here? They buying ships? All right, so that's the overall. So basically, they have massive negative free cash flow. Okay, I don't. Why? Because they're probably spending most of their cash on buying ships. They need ships. All right. Let's look at the fleet. Performance Shipping employs its fleet on spot voyages through pool arrangements and on time charters. These are all basically they're like renting out their vehicle for other people to their ships for other people to use to move oil back and forth. And their main ship is the Aframax version, the Aframax ship, which is basically an oil tanker container ship, basically. So here's all their Aframax tankers. So number one, when you look at this company, the first thing I say is, okay, the only thing they do is, it looks like, move oil. That's it. They only have this one variant of ship. So it's a very specialized company. You may have other shipping companies that have multiple things they ship. This one is very specialized. So this company's industry is subject to the whims of the oil industry, basically. Oil's in hot demand. Everybody needs it. Oh, my God. Chartering rates may go up. If nobody wants oil, chartering rates will plunge. But this is the company right here. They just rent these out, basically. It's what? 8 ships? 1, 2, 3, 4, 5, 6, 7. 8 ships. This is the company right here. Most of them were built in the first decade of the second millennium, basically. Okay. Or third millennium, excuse me. So let's keep reading. Okay, so here's where I found something very interesting. So this is their 10K. We'll go look at the balance sheet. But you're going to see how massively cyclical this company is. I think it was like page 10. So some of their risk factors, they discuss the cyclical nature of the industry. Let's see, where was it? Where was it? Did I miss it? Did I lose it? Cyclical and volatile. Cyclical and volatile. Volatile. I spell this morning. Here we go. Okay. So look how cyclical this company is. Remember, it's just a bunch of container ships that move oil around. There's just 8 of them. That's it. That's the company right there. So the tanker industry is both cyclical and volatile in terms of charter rates and profitability. You can't project something like this. For example, during the 10-year period from 2013 to 2022, Chime charter equivalent, or TC, spot rates for an Aframax tanker, which is the only tanker they have, between Curacao and Texas City, what's that? Fluctuate between 3,000 to 84,000 per day. So when you look at a company like this, you're like, oh man, their revenue went up very, very much. Wow, look at that revenue growth. Growth, my oath. Their revenue could go up massively. And then the next year, their revenue could absolutely plunge. Look at that. Between 3,000 to 84,000 per day. Periodic adjustments to the supply and demand for oil tankers cause the industry to be cyclical in nature. We expect continued volatility in market rates for our vessels in the foreseeable future. Blah, 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 blah. So let's keep reading a little bit more. So this company is mostly owned by its officers. So let's see if we can find the officers here. Oh my God, I hate this website. It's so slow. It's like, oh, okay, I gotta have the ship move forward. Okay, now I can click the button. Who we are. Our vessel management. Here we go. Should be here, right? No. Oh, here we go. So here's the team. Bunch of Greeks. We got Andreas Mikolopoulos, which, by the way, they're getting sued by one of those like ambulance chaser law firms for weird stuff they did with the shareholders. But anyway, so here's the managing director. Here's his wife, I believe. Financial reporting and accounting director, Eleni Leonatari. Legal counsel, technical director. Okay, we got all these different people here, but these are the officers of the company. Now, I believe this woman right here owns like a huge percentage of the company through like another company that she owns. And this company actually pays her company for different services and stuff. So that there's all these different things going on, all these interconnections. And, you know, it's just like this would take years to understand how this freaking company works. Or you'd have to actually work at this company to understand this freaking thing. So on top of the hassle of like trying to figure out who owns what and who's paying what, because I can guarantee you, even if the shareholders aren't getting paid, the directors, the officers are getting paid one way or another. Either they're getting salaries, either they're getting stock awards, either they're getting they have other companies that contract or provide services for performance shipping. These people are getting paid one way or another, but it's the shareholders, the other shareholders outside the company that are basically subject to the cyclical whims of the oil tanker industry. These are all the officers right here. Okay. I'm not saying there's anything fraudulent going on. I'm just saying this thing is like insanely complicated. You'd have to pay me like $1,000, $2,000 to do like an in-depth presentation of this company. All right. So major shareholders and related party transactions. So here are the major shareholders. Okay. Mango Shipping Corp owns 67% of the common share. So if we go to see what Mango Shipping Corp is, Aliki Paliu, the chairperson of our board of directors, owns and controls Mango Shipping Corp. So the chairperson of the board of directors, through that corporation, owns 67% of the common stock of this company. Is this the same woman? Oh, no, it isn't. I thought I saw his, I was looking at the wrong woman. The guy's wife is somewhere on here. Let's see. Oh my God. This thing is so annoying. I hate this website. Who we are. Here we go. It's a global shipping company, blah, 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 blah. There they are. Okay. So here's the CEO. He's the CEO. I like how they have different titles on different parts of the website. So Andreas Nikolias Mikolopoulos is the CEO. Aliki Palio is the chairperson of the board of directors. So she, through this company, Mango Shipping, owns 67% of the common shares. Okay. And there's also a note 5. Let's see. Aliki Paliu may be deemed to beneficially own 24 million common shares. Oh my, like she owns like this woman right here. I mean, she owns the company, basically. She basically controls the company. This is the person you got to listen to, not the CEO right here. Okay. It's freaking crazy. But you can see there's all this, this guy looks really familiar, by the way. I've seen him. I've seen that face before. I don't know where. Maybe at the truck stop. But let's see what else. So we got Mitsella Corporation. Andreas Mikolopoulos owns and controls Mitsella. Okay. So, and then what else? We have Funicular Funds. What is that? What's that? Let's see. Blah, 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 blah. Okay, I guess just some random company. So that's kind of how the ownership is. Basically, the vast majority of the company is controlled. It is controlled by this woman right here, Aliki Paliu. So you better get intimately familiar with her. Let's see what she did. She serves as the director since February 2020 as chairperson of our board. As of 2022, she serves as the vice president and treasurer of Unitized Ocean Transport Limited. She was employed as a director and treasurer for Alpha Sigma Shipping Corp. She studied theater studies at the University of Kent, okay, and obtained an MA in scenography at the Central St. Martin School of Art. And what is scenography? No. For some reason, I thought that was like related to oceanography. I don't think it is. I think it's just painting. She graduated from honors from the Greek School of Fine Arts. She's married to Andreas Mikolopoulos, our current CEO, director, and secretary. Okay, this woman's a big dog, man. She's packing the meat. You know what I'm saying? Interesting stuff. So let's read about the CEO. Who's this guy right here? He's a CEO. He served from 2019 to 2020. He served as the deputy chief executive officer. He also served as the chief financial officer of Diana Shipping. So this company changed its name a couple of years ago. Let's see. He started his career when he joined Merrill Lynch Private Banking in Paris. He became an international corporate auditor. Let's see what his degrees are. He's got a master's in economics and a master's in management sciences. Okay, so this, I can see why he runs the show. He's married to Aliki Paliu, who owns one of the directors and chairperson of the board. Okay, so these are the big dogs right here. These are the two owners, just so you know that. All right. So let's go ahead and okay. So here's where I was like, okay, this is what I was saying. The owners are still getting paid no matter what. Pure Brokerage and Shipping Corp. Pure Brokerage and Shipping Corp, or Pure, a company controlled by Aliki Paliu, the chairperson of the board of directors, provides us with brokerage services pursuant for a fixed monthly fee of $3,000 for each of our owned tanker vessels. So even if the company doesn't profit, Miss Aliki here is getting $24,000 a month fixed fee. Additionally, receives from us a fixed commission of 1.25% of our gross freight and higher income, subject to blah, 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 blah. Oops. For 2022, commissions and brokerage fees paid to Pure Brokerage added to $0.9 million and $0.2 million. So she made over $1 million, even if the company didn't make a single dollar in profit. Miss Aliki Paliu in 2022 made $1 million. I mean, the company was profitable then, obviously, but even if it's not profitable, she's still going to get paid. Okay. On October 18th, we sold to a subsidiary. They sold some land. Okay. Mango Shipping Corp. We entered into an unsecured credit facility with Mango Shipping, an affiliated entity whose beneficial owner is Aliki Paliu, for up to $5 million to be used for general working capital purposes. So there's this Mango Shipping lends money to this corporation to Performance Shipping. So no matter what, the owners get paid. Just saying. Something to keep in mind. Here's the legal so for the legal proceedings, it's just a bunch of like ambulance chasing trash. I wouldn't even worry about that. Let's see, dividends, whatever. They should not be paying dividends. Okay, let's see. Let's go ahead and look at the financials. Okay. Well, I guess, okay, here it is. Let's see. Down, 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 down. Where's the balance sheet? Where's the income statement? Where's the prop? Come on. Where's it at? Oh, let's read the auditor's report. Okay. Report of independent registered public accounting firm to the stockholder. Let's see who audited them. Ernst & Young, certified auditors, accountants, Hellas, Greek auditors, I think that's what that means. Let's see. Collectively referred to the consolidated financial. In our opinion, the consolidated financial statements present fairly in all material respects the financial position of the company and the results of its operation. Okay, so they basically give the stamp of approval for the financial statements, okay? That's good. You happy about that, ladies and gentlemen? All right, let's go ahead and look at the balance sheet. So here's the balance sheet. Let's look at it. Let's look at the changes. Cash went up massively. That could be from a share issuance, could be from debt. We'll see. Accounts receivable went up. I mean, the company's making way more money because all the spot rates have gone up. I mean, look at this rate increase. So I looked up the US dollar per day cost of shipping. Look how much the Aframax has gone up. Look at this. It's now $44,000 per day to like charter one of these boats out. That's pretty crazy, okay? Look how much it's gone up. But it could also go down in the future, so keep that in mind. Where were we? But yeah, that's why the company's revenue is going up. It's cyclical, okay? Inventories, whatever that could be. Prepaid expenses. I mean, so basically the only big change in current assets is they got a ton more cash. We'll see where it came from. Vessels, fixed assets. They bought a bunch of vessels. They almost doubled the not necessarily the amount of vessels, but they paid the amount of vessels on their books has doubled. That's a pretty significant change. Okay. Restricted cash. Let's see. Deferred charges. Prepaid charge. So basically, the only material thing I see with fixed assets, with long-term assets, is they basically doubled their amount of the cost of the amount of vessels they have. Let's look at current liability. Current portion of long-term bank debt. So they got almost $17 million of bank debt coming due within a year that they could either refinance or just pay off. Accounts payable, no crazy changes. Deferred revenue, accrued liabilities. So overall, their current ratio is still pretty well. They have more than enough cash to pay off. They could pay off all their short-term debts with the cash they had as of December 31st, 2022. Okay. Long-term bank debt. Okay. They took out a lot of debt. What do they do with it? Either they bought vessels or whatever. I don't know. So debt's up massively. Let's see. Equity. So they issued preferred stock. They issued a lot more common stock. And wow, they issued a ton of comments. Oh my God. Okay, now I know why the stock price went down. Oh boy. So it looks like they like 10x the amount of stock outstanding. Okay. They had, as of 2022, they had 4.1 million shares outstanding. And the year prior, they had 337,000. That was a massive dilution event. Oh, my Lord. That is dilution solution right there. And it's funny because they didn't really get a lot of cash from it. They got like 39 million plus, what is that? 50 million or, 39. No, hold on a minute. I'm stupid. Yeah, 39 million. And then they got, let's see, an additional. Oh my God. Is this in millions or is this in thousands? It's in thousands. Okay. 39,000 and then an additional 50 million. So basically they got like 50 million more bucks of cash. They got 50 million bucks, but they had to 10x their share count. Let's see. Accumulated deficits. So overall, this company cumulatively has not made money. And they have total stockholders equity of 155, which only went up because of share issuance. I mean, they had a little bit of profit too, but overall it's from the share issuance. Wow, that is I wouldn't how did this happen? Okay. I guess we can go read note 10, see what it says. Note 10. Oh my God. Note 10. Note 10. Note 10. Where's Note 10? Sometimes these reports just kill me, man. They need to like hyperlink the Note 10s. The company effected a 1-for-15 reverse stock split on its common while previously. Oh, okay. I guess that makes sense. It's a reverse stock split. So maybe it wasn't such a big dilution event. Let's see. Oh my God. Sorry, this is painstaking. Okay. Yeah, they did a reverse stock split and they issued a bunch of preferred stock. Okay, that's basically what they did. That makes sense. That makes a lot more sense. Okay. Let's see. Let's see. Let's look at the statement of cash flows. So I think that's part of it. We need to see the full picture here. I mean, I wonder if this includes I wonder if this change in shares was after the reverse stock split. Because you would think with the stock split, the number of shares issued would go up. And a reverse stock split, it would go down. So I'm really curious what happened here. That's why you want to look at the statement of cash flows. P&L, I mean, honestly, I wouldn't even waste my time looking at this to just because it's so cyclical. Like, it's like, okay, the revenue went up. What can I conclude from that? Spot rates went up. Wow, interesting. Yeah, I mean, they had a huge profit in 2022. Huge profit. All right, let's look at the statement of cash flows. Okay, well, here's the statement of changes in equity. Okay. So from 2021 to 2022, they exchanged common stock for Series B preferred shares. So there's an exchange. So basically they said, here, give me your common stock and I'll give you preferred stock. So that happened. Issuance of common stock under the at the market program, net of issuance. Issuance of units, net of issuance cost. Issuance of common stock in July warrant. Okay, so they were issuing common stock. Issuance of common stock in August. Yeah, okay. Oh my God. So they were issuing stock like crazy. That reverse stock split thing threw me off. Let's see. Okay. So they issued a bunch of preferred shares and common stock. What else did they do? Additional paid in capital. That's from issuances. Let's go look at the statement of cash flows. Let's see. They sold some vessels. Interesting. Let's look at the cash flows from financing activities. Here's the big one right here. So they borrowed money from related parties. It's probably from Mango. Proceeds from long. So they took on bank debt. They paid off a little bit of loans. They paid some long-term bank debt. Net on net, their bank debt increased. Issuance of units, common stock, and so they did issue stock. They issued $26 million of stock. So that was a very massive dilution event. And what did they use that money for? Well, they spent $143 million on acquiring vessels. Okay, so they used their good year in 2022 to buy a bunch of vessels. That's partially. They had positive operating cash flow, and they borrowed some money to buy new vessels, and they also issued some stock. So overall, I'm looking at this company. Obviously, there's something going on here. Like, this company's insanely complicated to understand. Insanely complicated to understand. Look at the 5-year stock performance. That's past performance. I get it, but it's down 99.64%. Something is wrong. Something is off about the future of this company. Look at the shares or look at the net income versus the market cap. Some people are projecting this stock's going to go be a disaster. Okay. I don't see things that jump out to me immediately on the balance sheet, income statement, statement of cash flows. So what that tells me is there's potentially something going on with the market, the chartering market. But overall, I mean, I don't like this thing. There's something off about this company. It's way too complicated, way too complex, very risky in my opinion. All right. Let's see. Let's do some comments. Hey, Strong Man, what's up? Strong Man, you saved me $3,000. How can I ever repay you? Well, just Venmo me all $3,000. Shirt on, glasses on. Strong man means business today. I don't know. I wear these glasses because my eyes my eyes hurt. Because my job, I stare at a computer screen all day. I have to wear these glasses or my vision starts to blur and I'm just like, ugh. What do you think of Paul Gabriel? Rich, entitled douchebag. Mo, very stupid person. He loves him. They contribute to a lot of his grifter videos. That's true. That is true. By the way, guys, don't forget, if you want a personalized video like I just did here, you pay me $40. I could pump your penny stock too. Let's see. Strong my dong. Let's see. What do you think about ASML? They have great margins in our monopoly stock. I have done zero research into that company. But you know what would make me research it is $40. Amit, shouldn't you be shilling Palin Doc? Is Amit? Is he here? Oh, you're this Amit. I was thinking Amit Kukricha. Let's see. I want Tattoo Chef to bounce back to $10 so Jeremy can say but I don't think that's going to happen, guys. There you go, Amit. Pay me $40. Let's see. $1 to $2 a minute for a licensed CPA to go over the analytics of a stock is a great deal. Good luck finding it for cheaper. It really is a good deal. Like $40 is not a lot of money for a 30-minute video, 35-minute video. Like I'm really not. Honestly, I'm probably going to bump it up to $50 or $60 for a video at some point. Right now, I'm just kind of like, whatever. See what the market's like, how much it costs, see what people are actually willing to pay it. But basically, yeah, video prices will be going up probably to $50 or $60 pretty soon. Can you do Course Hair My Horse? I can for $40, 100%. I don't have time to do my own videos anymore because people are paying me to make videos. Let's see. Equity market cap, PE, easy. I don't know about that. I mean, I'm not saying the stock won't go up, but there's a reason that stock is that low. I think it has something to do with the market. Because, like, they obviously had a great last year, right? Their year was amazing. Oh, my God, amazing year. Well, there's something in the future that people are worried about. Thanks for the recommendation. Going to buy the stock because you're excellent. There you go. Put all your money in this shipping container penny stock. Will you make a video retracting your statements on childless people cheating when achieving fire if I pay you $40? I was highly cheating. I'm not going to retract a statement for $40. I mean, I can talk about the subject more, but it's obvious that it's much easier to achieve fire if you don't have kids. Like that cannot be argued. If I didn't have kids, oh my God, my wife would be working. I would have much less money leaving my bank account. I wouldn't have that van. I would be making bank without kids. Of course, it's easier to fire when you don't have kids. Let's see. I admire your work ethic. Keep going. Thank you very much. I got kids. That's why I work so hard. That's why all I do is work. Would you do a pole dance video? No. You people are ridiculous. That's why I said you better make sure that I will actually do it before you pay me. Will you do a video on penile fracture? I'm about to pay you. Now, that one I would do. Okay, I would just cover the medical subject of it. So if you want to give me $50, I will make a video on penile fractures. Pole dancing, though, that's kind of pushing it. Okay. What's up, brother? Congrats. Thank you very much. How you doing, man? Hope your channel's going well. Achieve fire? What? Pay me $40. I'll talk more about fire. All right, guys. That's it for this video. I got more videos to put out because people are paying me so much money. You should open a Discord. I don't have time for that, man. I don't have time. If I did, it would be a lawless, insane asylum. Like, it would just be all hell would break. There would be nobody monitoring that Discord. It'd be a disaster. So, no. I mean, I would just go to Capital Mindsets Discord if you want to have a community. All right, guys. That's it. Pay me $40. Have a wonderful day.